I'm looking at September 98 and September 2024 as the playbook, because those are both years where the Fed was on extended pause and they cut in September. The number one trade is Nasdaq 100. So I think that's why the Mag 7 and the AI trade gets a lot of liftoff. The second is monetary liquidity sensitivity, global central banks easing. That's Bitcoin and Ethereum, and seasonally strong. I think they could make a monster move in the next 3 months, like huge. And the third, of course, is interest rate sensitives. That's really small caps and financials, but really the first two might be the standout trades.
In a market where many are wondering if they've missed the bull run, FundStrat's Tom Lee provides a clear answer. We are still mid-cycle. He argues that while some mega-cap trades may be maturing, the AI revolution has years of growth ahead, and the next major leg of the rally will come from a cyclical broadening. The key catalyst, he contends, is a Federal Reserve rate cut. This isn't just about lower borrowing costs. It's about injecting confidence back into a cautious business community, represented by an ISM manufacturing index that has been suppressed for 31 months. This confidence, he argues, will unleash a new wave of expansion and liquidity.
Subscribe to Daily Bitcoin Trends for expert insights, real-time market updates, and proven crypto strategies. No hype, just smart analysis to help you make better decisions in crypto.
All right, so since you said mid-cycle for the bull market, let's get right into the record highs that we are seeing. If it's mid-cycle, that kind of implies maybe third, fourth inning, maybe fifth at the latest. Is that how you see things for this rally?
Yeah, I mean, I think some parts are later cycle, like part of the Mag 7 trade. But I do think AI still has many years to just propel earnings surprise and innovation and economic growth. So I don't think it's late, like it's too late. It's not too late to buy the Mag 7. But I think the next leg of this is really the Fed cutting, helps the ISM get back above 50, brings down mortgage rates, so it's a cyclical broadening trade. And then I think, financials I think are still important, because I think that they're going to re-rate more like technology stocks. Goldman and JP Morgan are basically technology companies now. And as they embrace the blockchain, they're going to become more streamlined and less employee dependent, much more AI driven. So I think there's a lot to look forward to.
Now, if that is the case, you mentioned that it's because of a possible rate move lower and a trajectory of lower interest rates. Just how critical will it be to this market to have those lower interest rates? And do you think that there is a post-Fed playbook for what those companies are going to be?
Yes, I think it's really important for CEOs to be confident the Fed is cutting, because we know the labor market has slowed, maybe even wobbling. And that's because businesses are cautious, and the ISM reflects it. It's been 31 months below 50. The Fed can actually re-inject confidence by saying we're back into an easing cycle. That helps businesses get confident and expand again. So there's a lot of legs to this if the Fed cuts, and I think it'll be a real improvement in liquidity.
You alluded to some of the places that could see the biggest impact.
Yes.
But can you take us through those? If you had to put a top three together about where you think the most activity or juice could come from if the Fed were to embark on this path. I think of maybe home builders. I think of other parts of the market, maybe technology based on valuations. But in your mind, what are the places that are going to reap the most benefit from that?
Yeah, so I'm looking at September 98 and September 2024 as the playbook, because those are both years where the Fed was on extended pause and they cut in September. The number one trade is Nasdaq 100. So I think that's why the Mag 7 and the AI trade gets a lot of liftoff. The second is monetary liquidity sensitivity, global central banks easing. That's Bitcoin and Ethereum, and seasonally strong. I think they could make a monster move in the next 3 months, like huge. And the third, of course, is interest rate sensitives. That's really small caps and financials, but really the first two might be the standout trades.
All right. Because you mentioned the crypto side of things, you're actively involved now. It's not just a thing that you're doing on the side. You are very much engaged in the business of crypto. You govern, you oversee crypto assets now. If we were to say Ethereum, Bitcoin, we try to bucket them into risk-averse assets or risk-on type assets.
Yeah.
Is it fair to look at them that way? We used to compare them correlation-wise to the Nasdaq 100. Is that the fair assessment for how these things trade in the coming months?
Yes. Bitcoin is particularly monetary policy liquidity sensitive. Ethereum has elements of being sensitive to liquidity, but it's also part of this AI moving onto the blockchain and Wall Street moving onto the blockchain and that whole stablecoin ChatGPT moment for crypto. So Ethereum, I think, trades almost like 1971 Wall Street, which was the dollar went off the gold standard, a lot of innovation. Ethereum essentially is a growth protocol, and that's why Bitmine is so aggressively acquiring Ethereum.
Short answer is absolutely yes. We actually looked it up. I think the last time we spoke to you was when we launched Gemini in 2015 in October, so almost 10 years ago today. And I think the price of Bitcoin was $380. And so we've come a long way, but we also think it's still very much the bottom of the first inning because we see Bitcoin trading at $1 million a Bitcoin if it disrupts gold. And we think Bitcoin is gold 2.0. And I think we said the same exact thing to you about 10 years ago today. So we think there's easily a 10x from here. And it's still really early. And I think we'll be sitting here 10 years from now and looking back and saying, wow, today was really early.
Guys, how much of your success you think is on the back of Bitcoin itself versus now all of the sort of larger crypto system? We keep talking about Solana, we keep talking about Ether, all of these other cryptocurrencies, obviously stable coins becoming a big part of the industry as well.
Well, I think so. On day one, it was just Bitcoin. So Gemini was a place where people could easily and safely buy, sell, and store Bitcoin. And now I think we have 100 plus tokens. So the space has grown considerably over the last decade, but we think it's actually just the beginning. If you look at Project Crypto, that effort from the SEC to bring markets on chain, we recently partnered with Nasdaq to help power that future and bring markets on chain. So we think we're actually just getting started, even though we're a decade in.
To understand the immense potential of this catalyst, Lee draws a direct historical parallel to September 1998, the last time the Fed cut rates after a similarly extended pause. The playbook from that period is unambiguous. The number one performing trade was the Nasdaq 100, reinforcing the AI and megacap tech theme. But critically, the number two trade was assets most sensitive to monetary liquidity. In today's market, Lee states unequivocally that this means Bitcoin and Ethereum. He is forecasting not just a rally, but a potential monster move for these digital assets over the next 3 months, as the floodgates of central bank liquidity are reopened, directly benefiting the crypto ecosystem.
For those folks who are thinking about investing in you as part of this IPO, what would you say is the big differentiating factor between what Gemini does, for example, and what Coinbase does, for example? That's obviously a business that's in the public markets that people, I think, know, understand, and obviously there's a multiple on that might be the comp you're looking at.
Mm-hmm. So I think there's a lot of overlap in the companies, but one of the biggest, coolest products that we have today is the Gemini credit card. I actually brought our Bitcoin orange card that we released in May, and every time you swipe, you can earn Bitcoin or any crypto that we support. And I think that people realize that up to 4% back.
Up to 4% back.
Yeah. And that's in crypto real-time rewards that hits your account every time you swipe the credit card and buy. So you could buy a flat screen and earn Bitcoin back, and in the future, that Bitcoin could be worth more than the original purchase. So it's much better than...
How do you access that? Or can you? Or do you leave it there? Or do most people you find just leave it sitting there?
It's real time. So as soon as someone swipes, that Bitcoin or crypto is in your wallet, and you can then spend it or stake it. We think you should hodl it. And in some merchants, we're even offering up to 10% back. So if we think Bitcoin's a 10x from here. So your purchase today at 10% back is actually free.
That's what I have to
tomorrow.
say. When I first heard about this, I thought that's a really interesting way, because it's the equivalent of rounding up on every dollar you spend or something.
Right.
You're not thinking about what's going there, and you can save it and hold it. And
you're not changing your behavior. You're going about your day, but you're investing in your future. You're future-proofing yourself. And so that's super important versus cash is always depreciating, right? Cash is never going to be worth more in the future. And points, who knows what
that's worth. It's a total.
And then the
black box.
airline lounge game. I mean, you wait online to get into a lounge and then sit on the floor because there's no seats available.
So crowded.
People are over.
And there are no sneeze screens. It's disgusting. I'd almost rather stay at one of the. Can I ask you you both were so early and understood Bitcoin so early, and you both go to Harvard. I mean, you're both smart. So I don't care who answers this. So 10 times in 10 years. So at that point, is a couple, I don't know how many more halvings. It'll be almost impossible to mine new Bitcoins in 10 years. We're getting close to 100.
There will be 2 more halvings, I think, in the next 10 years or in that period. But I think that, look, as Bitcoin increases, like the mining revenue goes up as well, even as
But do we get to where it's not going to keep appreciating and it truly does become something that could be transactional? And then does it lose its value at that point as an inflation hedge against money printing?
So we don't think it actually has to be a transactional currency, just like you're not trying to buy a cup of coffee with gold. It's a store of value, and if that's all Bitcoin is gold 2.0, that's tremendous.
But with gold, you can base it on stock to flow, right? And because there's a replacement per year of how much gold we mine. If we're mining no more Bitcoin, can you even...
You can still mine, and there will be...
still mine.
Yeah, so block rewards, even as the mint decreases, there's transaction fees and other aspects of that.
Most of the mining rewards will switch to transaction fees. So
I knew you would understand
the supply is fixed, and that's a strength. Versus gold is actually slightly increasing.
Right, because every year you can mine. I assume we're not going to run out of gold.
Hey guys,
it does expand.
Yeah, Andrew.
In terms of just risks related to the company, you talked about the credit card. The 4% is remarkable. I imagine the economics of that only work if Bitcoin continues to either go up or remain where it is. If Bitcoin starts to fall, that cost then is borne by you in a much more material way, right?
So no, think of it as like a typical credit card program. We extend consumer credit. We underwrite the consumers in the program. And then the rewards will come from things like interchange. Merchants help fund rewards. So it actually just works as a standalone business, regardless of sort of the price of Bitcoin.
Within this explosive crypto outlook, Lee makes a crucial analytical distinction. Bitcoin, he argues, is a pure play on monetary policy and liquidity sensitivity. Its performance is directly tied to the flow of global capital, seeking a hedge against debasement. Ethereum, however, is a different beast. While it also benefits from liquidity, it's primarily a growth protocol. Its value is driven by the twin engines of technological adoption, the 1971 moment of Wall Street financializing its entire infrastructure on-chain, and the AI revolution building its future on Ethereum's rails. This positions Bitcoin as the premier monetary asset and Ethereum as the premier technology platform, making them the 2 standout trades for the next phase of this bull market.